This is the Market Roundup. This is Rob Reinhold and Maverick Traders. Welcome. It is October 19th. Tomorrow is monthly options expiration, so I know a very busy day for most of us. Let's jump into it. In this session, we're going to be going over today what happened, what was the news. We did not get a bounce like I thought. We'll go through that. Current market analysis. Did we get a ratings change and number change? And the answer is yes, we did. We'll go through that. And as always, we'll look for some setups. I've got one bull, one bear, and one neutral trade here.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Today we started out weak and we just got weaker all day long. So let's go through the news. Before the bell, we got the initial jobless claims much stronger than expected. Well, there was a lot less jobless claims than it was expected, showing that the strength in the labor market just keeps up. We have got lots of good news this week in the economy. Retail sales that were great. Pretty much every economic number that came out has been way better than expected, which is now putting the Fed into a place where they have to say that they're going to stay higher for longer. And we did hear from Chairman Powell today, and that's what he said. He said there might be another rate hike or two that we need to put onto this economy to slow it down enough. And what happened? Well, the bonds didn't love that news. They went higher and higher and higher. We'll check out a chart here in the bonds in a second. But let's run down the numbers here. Dow down 0.75%, S&P down 0.85%, Q's down about 1%. Russell just continues to underperform everything, down 1.5%. And we had some big moves in both oil and gold today. Today was an ugly day. 76% of all stocks went lower. We are definitely in bear market territory. 80% of all stocks are below their 50-day moving average. Overall, the market looks pretty shaky here at the moment. And I want to go into this chart here. Now, I have made a very public call that I said, okay, October 15th, that was the end of the weak seasonality, and that at this point, we were going to get more of a bullish market than bearish market. So again, that was my very public call I made. And I got to say, for the first 2 days, I was looking pretty smart. And then yesterday, I was like, oh, I'm not looking so smart anymore. But you know what? It held on to its 20-period moving average. So I thought, okay, you know what? If it bounces up, it will be just fine. And look, the market, today's candle, I can no longer say that I was right here, because what I thought was going to happen didn't happen. Now, this is something that I was not ever able to do as a younger trader, because I would just stand my ground and say, I know I'm right. I know I'm right. I know the market's going to turn around here. I have been wrong a lot of times, and now I no longer do that. I am flat out wrong that the October 15th was the change in the bearish market. Now look, that's been the pattern over the last couple of years, but here we are. This candle says, Rob, you are wrong. Now look, we could bounce up at any time. Who knows what's going to happen? But technical analysis says we are likely going to make a new low. The next area for this market, 4220 on the S&P. Now look, this chart says a lot, but this chart says more. This is the 10-year U.S. government bond, and take a look at it. It's at 4.99%. This bond wants to go above 5%. It just wants it, and it's been heading towards that, and I think we're going to see it above 5% tomorrow. Now, here's the question. Remember the times when like Apple would get up to like, oh, it's up to $200 a share or a $1 trillion market cap, or we have these arbitrary things that happen at these round numbers that really don't mean anything. But like when Apple was racing up to, 1,000 a couple years ago, everyone was watching. And I swear that the market wanted Apple to get above 1,000. And once it got above 1,000, it backed off pretty quickly. And it didn't go any higher for a while. It had to consolidate. I feel like that's what's happening with the bonds. The bonds want to go above 5%. The 10-year bond wants to go above 5%. I think until that happens, the market is going to stay bearish. Tomorrow, we're right there. We're at 4.99. I think tomorrow we peak up above 5, and I don't think the market likes it. The question is, does then, once it's above 5, everyone says, oh, it happened, and it releases a little bit of all that tension and causes the bonds to back off a little bit, which would cause the market to bounce. If that doesn't happen tomorrow, if we have another down period tomorrow in the market, I think you've got to look at that 42.20 and say that's the next level we're going to hit and possibly break below that. The heat map, look, it was ugly pretty much everywhere. There were some little flecks of green. Netflix had a great day, but that really was about it. Lots of red across the board. Here's the question. Did we change our outlook? And the answer was yes. Just even yesterday, we were at the 20. So this was a 0. This was a -1. This was a -1. So yesterday, we were at a -2, technically. And the day before that, we were at a -1, technically. We are all the way back to a -3. Technically speaking, this is as ugly as it gets. So no matter what my opinion is, even if I still believe that October 15th, that season now is going to hold, I can't trade it because the chart is telling me what to do and is telling me, hey, it's starting to look ugly again on the short side. So let's jump into some potential trades. This is the first one here. The first one here is CrowdStrike. This is a stock that's held up really, really well. And you can see this morning that actually had an upgrade, gapped up and closed all the way down. Now, people are going to ask this question, say, Rob, why in the world do you have this on a bullish watch list? That is an ugly, ugly candle today. That is a bearish engulfing candle. And we're most likely going to pull back a little bit more. And I completely agree with you. I completely agree. I think the market is going to go a little bit lower. I don't think the market's going to go a lot lower, but I think it's going to go a little bit lower. And if I think that potentially we could have a bounce, then I want to start looking at the things that are the best, things that have held up in the face of an ugly market. And take a look at this one. This one has held up really great. I'm not saying that it's ready to trade tomorrow. I'm saying is if we do get any sort of recovery in the next day or two, not day or two, but over the next week, then I think you want to start to take a look at the winners. And CrowdStrike is clearly one of the strongest stocks out there. So I don't have any setup for you, but I'm just starting to take a look at some things I like in the long side if this market does end up bottoming out. That being said, the chart says it is likely headed lower. So I want to put on a sideways, slightly bearish trade. I don't have many sideways trades on at the moment. I've been pretty directional lately. I want to look at really this $40. So this is going to be a slightly bearish butterfly. So I'm going to look at the 37, 40, 43. So my profit windows are probably going to be somewhere in this, again, high 38s to high 41s. As you can see, this is slightly bearish. I want this stock to come right back into this $40 area. It's not a real directional call. It's just, hey, I think we're going to fade a little bit. Let me make a trade with some theta and a little bit of delta, and I'm going to use this 40 butterfly on it. And then on the downside, there's a whole bunch on the downside. I'm looking for the things that have been the weakest, that has had the nicest bounces. As you can see here, this is Sunrun. Got all the way down here to about $9.50, ran all the way up to $12.50. That's a 30% rally. I love when these really weak stocks have these 30% rallies. You can see ugly day today, but 950 is going to be the next stop on this. And if we go even more, we could potentially go down to into the 8s. I'm not going to play it that aggressively. It's 1058 right here. I'm looking at a 1011 bear call spread. I'm probably going to get about 60 cents on this one, have 40 cents of risk. I'm not looking to play this thing down to 0. I'm just looking to play it to 10. That's it. Let's talk about tomorrow. I think early in the morning, we get the bond market above 5%. I actually think the stock market is highly likely to have a gap lower tomorrow. I think interest rates move up all night. I think overseas markets fall apart based on what we did today. And I think tomorrow morning is an ugly open. And I think the bonds pierce above that 5% and it freaks everyone out. The question is it like those moments, that, well, the stock's getting to $100 and it finally gets above $100 and then it backs off to 98 and sits there for 2 weeks? Could this be one of those moments? We will know tomorrow. We will know tomorrow. If we peak out above 5% and then we come back down under that 5%, the stock market highly is likely to rally back up and maybe even have a positive close on that. If that happens, anyone with a bullish outlook, you have a little bit of hope. Nothing great, but just a little bit of hope. If tomorrow the bonds go above 5% and they close significantly above 5%, I don't think the 4220 holds on the S&P. I think we will make a new low from that October 2nd low that we had. So as you can see here, my outlook is on the best case scenario, it's a 1-2% move to the upside. On the worst case scenario, it's a 4 to 5% move to the downside. So we have asymmetric risk here. You want to be leaning to the bear side. And even if we get a bounce, you still want to be leaning to the bear side because I think that asymmetric risk is going to pay off in the long run. We are in earnings season, so check earnings reports. We got American Express and Schlumberger. Yes, I know it's Schlumberger, but at Maverick, we call it Schlumberger. Years and years ago, one of my good trading friends didn't really know any companies, just barely learned trading, and he came across this stock called Schlumberger. I laughed so hard. So SLB, that's how we say Schlumberger at Maverick. We're not fancy. We say it's Schlumberger. All right, thanks for joining me. That's the Market Roundup. I will be talking about the market in the trading room over the weekend. One more day on Friday, I'll have a much better idea of what I think is likely to happen. Goodbye, everybody.